Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 12th of December 2020 and we're publishing our gold and silver weekly update for the week ending the 11th of December. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices in the week to come. Now, before we report on what happened this past week, a brief shout out to 5 particular videos we wish to draw your attention to that we produced recently. Yesterday, Saxo Bank predicts $50 silver for 2021. Then earlier, gold forecast to rise to $2,300 in 2021. Bullish silver opportunities for 2020-21. $100 silver. And for those who have more of a bearish bent and inclination, $1,000 gold next, not $5,000, at least according to Harry Dent. And we've placed links to all of these 5 in the description box below. Now, gold rose $1 last week from $1,839 to $1,840, having hit a high of $1,875 and a low of $1,824. A rise of just 0.04%, but at last hitting a higher high and a higher low than the previous week, albeit within a tiny range band of just $51 between its high and low. In sterling terms, gold finished the week at £1,391. That's up £22 or 1.6%. And in euros, it closed at €1,519. That's up €2 or 0.1%. Silver fell though, some 26 cents, from $24.22 to $23.96, having hit a high of $24.88 and a low of $23.61, a fall of 1%. But despite its fall, it still managed, like gold, higher highs and higher lows compared with the previous week, and again operating within a relatively tight margin of just $1.27 between its high and its low. In sterling terms, silver closed at £18.11. That's up 9 pence, or 0.5%. And in euros, it closed at €19.78. That's down €0.20 or 1%. The gold to silver ratio obviously rose from 75.9 to 1 to 76.8 to 1. So no real great change there. Bitcoin is down $729 at $18,103. The Dow Jones closed on Friday at 30,046, up 47 points on the day, but down 172 points on the week. The S&P 500 closed at 3,663, down 4 points on the day and down 36 points on the week, and the Nasdaq Composite closed at 12,377, down 27 points on the day and down 87 points on the week. So although generally these markets were down, it's such a tiny amount, it's almost unchanged, and still now operating very close to all-time highs, which for all 3 indices were recently achieved. Brent crude closed at $49.97, up 72 cents on the week, and again following multiple week rises, and actually touching our predicted $50 level on Thursday that we have been forecasting for some time. And if I had a sound machine here, I'd be playing an applause track. WTI, only joking. WTI crude closed at $46.57, up 31 cents, again following multiple week rises, albeit the amount obviously is now much diminished. The dollar index is down yet again, and this time by 0.72, and is resting at 90.97. Our conclusion last week stated, quote, So what can we really expect for next week in terms of performance? Well, again, more of the same, with perhaps the focus moving to the upper end of the median rather than the lower end. We're expecting gold to trade between $1,800 and $1,900, with $1,700 and $1,950 being outliers, and silver trading $23 to $25, with a $22 to $26 as an outlier. Well, in fact, the reality is that both gold and silver operated within very tight margins this past week, which, to be frank, was quite underwhelming. The only reason prices performed so well in sterling terms was the devaluation of sterling against the US dollar and other currencies, primarily because it looks like EU negotiations, or lack of them, are looking as if they're going to result in a no-deal departure on the 31st of December. Meaning the UK will leave under WTO terms. We shall have a better idea tomorrow where a final deadline rests. So don't forget please to tune in to Richard and Greg then, as we will be producing a report on that channel as to what's happened with the negotiations. Now we suspect we're still in a phase of minor consolidation as far as gold is concerned. $1,900 is certainly, in our view, not only a key resistance level, but also a psychological resistance level before directional change can be witnessed. In other words, gold may struggle to get that far, but once it does, then it would quickly rise to 1950, and then once again test 2000 or treat 2000 as its next challenge. Now, admittedly, technical analyst purists will say, no, there are multiple resistance points between the current level and then, and we agree. But one cannot underestimate the importance of psychology in investment decision-making either, no matter how much one refers to algorithms, technical theories and cycles. Equally, on the downside, 1800 offers considerable support, but technically the 1770 level is key. A brief appraisal of the technicals suggests that the 10-day moving average at 1835 is being tested, with resistance at the 50-day moving average of $1,875. Short-term momentum is now negative, while medium-term momentum remains positive. The fast stochastic suggests a sell signal, while the MACD suggests consolidation. So as we have stated earlier, this coming week, at least based on the technicals, we're likely to have more of the same. Friday's movement in gold is interesting in that earlier in the day gold was heading once again towards its week's low until the producer price index figures for November were announced, coming in at 0.1% compared with expectations of 0.2%, thereby potentially at least suggesting that inflationary pressures were subsiding and consequently suggesting to some that either lower interest rates or even more stimulus may be necessary if this trend continues, and thereby gold recovered all of its day's losses and some. Weekly jobless claims figures were also disappointing, as too were productivity figures announced on Tuesday, though most of the remaining data announced during the week were in line with expectations or were marginally positive. Silver had an interesting topsy-turvy week, albeit within a relatively tight margin between highs and lows. It dropped upon market opening on Monday, then staged a dramatic bounce higher, collapsed again on Wednesday, and then vacillated up and down until the end of the week in an even more tight range. We felt Friday was quite fascinating in that we could see silver constantly moving just above and just below $24, literally for a number of hours. Now this is where the 20 EMA sits and was seen as support, but frankly, it simply could not make up its mind. And ultimately closing just below this figure is not that critical in our view, as it could have easily closed just above it too when the markets closed. Again, technical analysts will state that $23.50 to $24 is key support, and should this be broken, then silver could head down to $23.50, then $23.30, and then $22.90. On the upside, we have a small resistance level at $24.15, or the 50-day EMA at $24.25, which is more pertinent, and a stronger one at $24.60. And should all of these be broken, then of course $25 will be the target. Our view still holds that $26 is a very major resistance level. And again, we cannot see silver breach that level this coming week. So looking ahead to next week, the following US economic data is to be announced, and midweek it's quite packed. Monday, nothing. Nothing scheduled at all. Day off, obviously, for the analysts on Monday. Tuesday, we have the import price index for November, the industrial production index, and the capacity utilization, all for November. Wednesday, this is an important day. Retail sales for November, market manufacturing PMI and market services PMI for December, business inventories for October, but the key of all, the FOMC announcement on interest rates and Fed Chair Powell's statement thereafter. Thursday, of course, our regular weekly jobless claims, still to be watched. Make sure they're not going even higher. Housing starts for November and building permits for November. And then on Friday, the current account deficit for Q3 and leading economic indicators for November. So it clearly goes without saying that Wednesday will be the day analysts' eyes will be focused on and deliberating on Fed Chair Powell's comments at the press conference after the FOMC decision on rates and publication of its statement. We shall give an analysis of that on Thursday. Now, before we analyse the market more closely, our view at present is that the Fed will steer clear of more stimulus but ramp up its dovish rhetoric and emphasise the need for more fiscal support as COVID-19 containment measures increasingly weigh on economic activity. Now, if our view changes from this, we shall certainly let you know. So this coming week, we still feel comfortable with the target we set for last week. Gold to trade between 1800 and 1900 in the main, with 1700 and 1950 being outliers, and silver trading within $23 to $25 in the main, with a $22 to $26 range as an outlier. Now, of course, geopolitical issues can still play a part. And with it now looking as if Biden is the president-elect, with the Supreme Court rejecting to hear Texas AG's recent submission last night, which was supported by the president himself, plus numerous other state AGs and congressional members, it certainly looks as if the Electoral College will find in favour of Biden on Monday the 14th of December, just 2 days away. It's at that meeting 538 electors will meet, and even if there are some what are called faithless electors, those not voting the way their states tell them to vote, which cannot be discounted, it still appears that Biden will still nevertheless be on track to receive close to the original 306 votes, or 57%, or just shy of 57% of the total, which, if this does happen, Biden will then officially be declared the president-elect, regardless of any ensuing legal action. Though, there will still be one move remaining at Trump's disposal, and that is when Congress meets in early January to ultimately ratify the Electoral College decision. So it is fair to say that Biden is not completely out of the woods as yet. Just a quick reminder, tomorrow we'll be publishing episode 2 of our gold and silver versus Bitcoin series. And what we found quite fascinating was that a number of our pumper friends all started issuing, which shouldn't really be surprising, but we didn't realize they followed us, all started issuing videos on why gold and silver are superior to Bitcoin, and Bitcoin doesn't really pose a challenge. Let's see what happens after our video tomorrow. So that's a shout out for tomorrow. Meanwhile, what do you think is likely to happen this coming week? What is the Fed going to do on Wednesday? And where do you see gold and silver prices, and the dollar for that matter, resting during the course of this week? Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as already mentioned, please do pop over to our Richard and Greg channel, where we will be discussing other events that are occurring throughout the world. And finally, we wish you a safe enjoyable weekend, and a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.